David was on a year to the day ago in 2016, April 19th of last year. BlackRock was his first top pick, total return just under 7%.
Yeah, BlackRock is a very straightforward way to invest in investment management and, frankly, better markets. While I prefer to be an active manager, they're more obviously index focused, but they do have an active ETF business. And they're going to continue to grow. They're growing revenues, they're growing earnings, they're growing their dividend. They just raised their dividend about 10%. And this is one that should continue to do very well based on the themes in the market today.
Because you are ultimately bullish on equities.
I said a year ago that I was more bullish than I had been in my career. Starting in February of last year, and I continue to be very bullish long-term equities. In the short run, I think we're having a little correction, but I think that this year is going to go particularly well.
And a yield of about 2.7% on BlackRock, and the market cap 61 billion. Yeah, that's a lot of assets. Honeywell, classic industrial play, up around 9%.
Yeah, we continue to really like industrials. If I had to pick four themes, I would pick technology, industrials, financial, and consumer discretionary. The capital stock of the U.S. economy is as old as it's been in history. They spent less last year on capital spending than any year in 85 years, but it's picking up. And with better small business optimism, there is money getting spent on capital spending outside of the energy industry, and Honeywell is at the center of the Internet of Things and creating connected devices and measurement devices in manufacturing processes. So I think it should continue to do well.
And then finally, Franco-Nevada, generally seen as a cautious play on precious minerals.
Yeah, so we are not big gold bugs. And frankly, I'm not overly bullish on the gold sector. But that's good for Franco-Nevada because they are a financier. Really, they are the financier of last resort. When the market isn't interested in financing small companies, they'll go in and they'll buy a royalty stream. And so Franco's done a very good job. I think it's been about the best performing gold stock in the group. I think there might be better neighborhoods to focus in right now. But we continue to own the stock. It's continued to perform well.
And why do you like it? Just as a way of having precious metals exposure as a kind of an insurance policy?
It's just a really good business.
Sure.
It's not about gold. It's about being a good business. If the companies they finance go bankrupt, they have a royalty attached to the property forever. Yeah. It's not about the company. So somebody else will operate it and they'll get paid. If the company can't keep their costs down, it doesn't matter. They're getting a revenue royalty. So it's just a really good business model, and they've been able to structure some very good deals for themselves over time.
Yeah, and they do this alchemy as well, because sometimes they'll buy a metal stream from a company where investors aren't giving it very much value.
That's
but
right.
People love Franco stock.
That's right, and it's a very diversified stream of revenue.
Yeah, they have some energy as well. Okay, so there we have it. Past picks, a year to the day. That was neat, and they are all up at least 6%. We are going to be back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. The topic today, North American large caps, although I know David has been very generous and allowed a couple of smallish caps to sneak in there, but give him a call, 1-855-326-6266.